Wow! I can't do a growl. That's why I don't try it. This is Dave White. I'll be sitting in for the first and maybe second segments of the Tom O'Brien Show. Tom will be here in just a minute. And that will be it. And that will be the last growl I ever do. That's it. I failed. I'm going to record or get a good recording of a tiger and do that. Anyway, as we start off the show and kind of standing in for Tom O'Brien for the first segment of his show until he gets in, just want to look at the stock market. And, of course, if you've been listening to my show between 2 and 3 each day, looking for a very light volume move up into the 3-day weekend, pretty much what we're getting. At the start of 2 p.m. Eastern, normally you want to see around 2 billion shares on the New York Consolidated Tape. That's a little different volume than Tom may quote, but you might see two different versions of a volume for the stock market on the New York Stock Exchange. One of them might be what's called the floor traded volume, which I think Tom reports most of the time. I look at, just because I get it, the total volume of shares on and off the floor. That means ECN's, electronic commerce networks, where you can trade at a far discounted rate from the New York Stock Exchange. But like I said, I'd like to see the show, at least even in this light volume summer, hit somewhere close to 2 billion shares at 2 o'clock. And normally, somewhere around 2.4 by the time the show's over. We're doing about 1.6 billion shares, so a very, very light volume, as we have exceeded the S&P cash 2,000 level, went to 2,001.95. But again, very light volume, and as we continue to go into a very light volume period of vacations and going into a 3-day weekend, this is a very tough time to be short a market. And the old saying is, don't be short a quiet market, is probably a good one in these last 2 weeks. Same thing from about the 15th on in December. It's awful tough to be short the market because everybody's just waiting for the start of the new year to either buy or sell. Not a lot of reasons to get in front of the freight train. So if you are short, you're not going to find a lot of people getting out of the way. Kind of what's happening now, and that is just a seller's strike. And if you are short, you need some volatility and a little bit of scaredom to get out at a profit. And unfortunately, you're not going to get that. My guess is that if you are bearish on the market, probably not going to see anything develop into at least the first week of September. Of course, that week we come back is very short. That is I think the first is the vacation day for the end of the 3-day weekend. And then you get 4 days of trading. And for the most part, you really don't see volumes come back into the market until that second week of September, which takes you right into options expiration. And my guess is that you're probably going to see the market hang out, maybe even through expiration, unless we get some kind of surprise. I was kind of in the same position in 2001, and of course, we came back and had 9/11. Market was very weak at the time. In fact, some of the recovered documents from Al-Qaeda showed that they were looking very much at pulling something because they thought that the markets were very prone to a giant attack, and were more than interested in making sure that just not terror happened, but also a damage to the financial markets of the United States. But, we're up here at 10 points, just a 1.5 lower than 2000. So not much off these highs. It's going to really give you an idea of how the market, when the market closes, what we're going to be doing over the next couple of days. Not a lot of movement in other things like commodities. I think gold's off a couple of bucks, and we're looking at crude off probably 25 cents, something like that. And that's it. I know Tom is going to be back here, I guess, in the second segment. But one of the things he's brought up in the past, and we've talked about, I think, on air before, is a company called Emulex. On this day in 2000, as we look at financial history, this was incredibly huge moving stock. There was also another one in like 2004 or 2005 that pretty much the same thing happened. But it gives you a good indication that maybe if things are too bad to be true, they probably are, and too good to be true also. But on this day in 2000, internet continues to empower a lot of investors, although way off the highs. Internet Wire was a press release service, issues bulletins from a lot of the public companies on it. A gentleman that was a former employee had figured out a way to get the press statement out and specifically targeted Emulex in the fact that when the stock market opened, it was only 6:30 in California, and probably the CEOs and all the executives hadn't even gotten out of bed yet. Now, this issue, along with one in the 2004-2005 level, where the exact same, or 2005 timeframe, where basically the same thing happened. That was a phony press release came out. Anyway, he pocketed $241,000 in profits by buying a whole bunch of puts on Emulex and putting out a basically phony press release. And if I remember right, the thing was trading at $120. Opened up, I think the press release came out about 5 minutes before the market opened. Thing opened up like $30 or $40 down to, well, I think I remember watching it in the 85s. By the end of the day, they'd washed all the sales because, of course, it was a phony press release. And some people that were long and sold, and some of the people were short and long. And basically, the stock popped after they found out it wasn't anything wrong. And like the rest of the internet stocks, it continued to sell off for years to come. I think it went down to $5 at its lowest or something. And some of the people, of course, that sold locked in $110 million loss by selling on the news. 2 weeks later, the SEC nails the con artist Mark Jacob for securities fraud. So just always be aware of what's happening in the news. And this was a issue where the news being bad was probably too much to be believed. Now, CNBC and most of the other companies, this has been tried several times since 2005. CNBC now has basically the phone numbers, home phone numbers of every CEO, and can get to them in a moment's notice when they see this. So they can verify that these press releases are correct. There's even things now, basically cryptographic controls, to make sure that you can verify that the key that comes out in these press releases verifies that it comes from the company themselves and not somebody else. So at least this is one of the few barn doors that was shut behind itself, at least even though the, as they say in the FAA, the tombstone was planted. And most of the things don't change in the aviation community until there are enough tombstones that the public gets excited about it, and things are changed. Well, this tombstone happened today in 2000, and it's an interesting ride, all I can tell you. I shorted it at the beginning of the day, and of course all those shares and trades were washed. But I thought I'd made a great deal of money that day and ended up making nothing. But I digress. If you were listening to the last hour that I was in the show, we were talking about advanced decline lines, and I sent out some links, and if you want them on advanced decline lines and the way to look at them, I'll be glad to send them to you, too. You can always email me at path@tfnn.com. But someone was looking at just the naked advanced decline line data, and if you want that, I said that there was a way of looking at it where you had the New York Stock Exchange, the NASDAQ, the Amex, and bulletin board stocks split out. But you probably didn't want to look at them in a vacuum. And that is, I look at the New York Stock Exchange, what they call the McClellan Summation Index. That is a rolling average of advancers and decliners. Anyway, if you want the links, you can always email me at path@tfnn.com. I think Tom's coming back here in the next segment, so we're going to be all ready to go. And I'll see you tomorrow at 2 o'clock over most of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year, and if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. I want to thank our man Dave for getting that first segment for me. Much appreciated. Dow Industrials right now are up by 86. You get the NASDAQ up 18. S&Ps are up by 8.5. Gold contract down $1.80, trading out at $1,278 an ounce. Silver off 3 cents at $19.42 an ounce. Light sweet crude down 36 cents at 93.24. Bonds, they just refuse to go down, folks. You get the 10-year up 2 ticks at 125.30. The 30-year up 10 ticks at 140.24. King dollar up 208 ticks at 82.58. The euro is down 48 at 131.94. And the yen is trading out there at 103.98. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Cash S&P, you're at 1998 right now. The high of last Thursday was 1994.76. It's over that, baby. We go take a look at the SPY, the SPY. What you have with the SPY is that there's 49 million shares. You're up 91 cents right now. You're at 200 plus 200.10. You know, we'll see where this shakes out. We really haven't moved that much in the last 3 or 4 days. You get a couple small dojis up here. If you get a little doji on the other side on the way down, tomorrow would be a real trip. Why? Because that'll be a little tiny tri-star doji. And what happens with a tri-star doji, folks, is really, well, first off, it's really hard to set up. What it is that it would take 3 days in a row that you have flat markets and the SPY. And what it would also take, though, is that you have a gap in between that, meaning that on Friday, on Thursday rather, on Friday, you traded from 198 to 199.69. You gapped higher today. You need a gap lower tomorrow, and bottom do the exact same thing, meaning have a flat market, a little bullish, bearish, going back and forth, and that is a tri-star doji. Tri-star dojis needs follow through after that fact, but we'll see how that shakes out. NASDAQ Composite. Volume-wise, of course, what you're going to have out here this week. This week's going to be one of the lightest weeks of the whole year. And last week was light. This week, what you have, of course, we get Labor Day happening next Monday. What that's going to set up is that's going to set up a very low Friday. Right now, we are running at the lowest amount of trades for the year thus far, and that's the exact same thing that happened on Friday. Right now on the NYSE, we have 309 million. That means we'll clock in about 450. On the NASDAQ, what we have right now on the NASDAQ, we are at HP, let me see. NASDAQ is clocking in at 1.1. That's not bad in the NASDAQ, actually. So that means in the NASDAQ, not that it's that bad, but that means we'll clock in about 1.450. 3 Qs, NDX 100. We have the NDX 100. That is trading at 99.37. And bottom line continues higher with lighter volume. I mean, it just crawled the whole way up. There's no doubt about it. You hear the press just about everywhere. Now the NDX 100 is up 10 days in a row. That's from a low of 93, and right now you're at 99.37. Gold contract. What we have with gold is this. Okay, so gold, there's going to be a big week in gold here, folks, and this is why. The gold contract is at 1278.40. The low of last week was 1277. Actually, 1273.40 on this contract. We came down with volume. However, it was much lighter volume than its day of strength from June 19th. The low of June 19th was 1277. So first off, you got to stay inside 1277. What we need here, ASAP, though, is a large sign of strength. You know, I figure we're going to build costs for a couple of days, but you need a sign of strength, and you need this contract to trade inside. This is the December contract we're dealing with right now, inside the 1281.30. That would get it in the higher range. We go take a look at silver. What we have with silver is this. Silver couldn't hold the June 19th sign of strength. The low of that is 1987. You're below it. You have come below it with lighter volume, which is an indication that, yeah, I can get back above it. But what it needs to do ASAP is get back inside the 19.85 price point, which is 50 cents in silver, and that's a big move. The XAU, the HUI, both of those had backed down with lighter volume. I do expect both of them are going to go after that swing point, and the swing point we're talking about is the August 5th swing point, and that's going to be crucial to basically see if, in fact, the metal's going to hang up there and the equities are going to hang. Now, bonds. Let's go to bonds. We take a look at the 10-year bond first. This is what you have. 10-year bond refuses to back off. 10-year bonds. Okay, we are at 125.30. That baby still wants to run to that 128 level. The 30-year bond is just, that 30 is really strong. 30 is at 140.24. That wants to get up to the 142 area. As we get up to that area, we'll see, in fact, if it can just take it right through it, or you're going to build some cars, because that's ice, folks. That's what that is. That you can, the Bears can basically make an argument that that's a dead cat bounce into it. The Bulls can make an argument that it's really strong. My argument would be that, yeah, we're going to go into it and probably go higher. Why? Because we had come down with lighter volume. We're going up with huge volume. When you actually take a look at the bond market, and we take a look at this on a much longer basis, all it did, and it never got back all the way to its sign of strength. When you take a look at this, when bonds took off, folks, they took off from a 112 level in 08. They took off again from a 116 level in 011. We were just retraced, which was a vicious retracement. It still only came down to 127. So, King Dollar. Now, this King Dollar, folks, you talk about a B to a C of an ABC structure on the way up. Well, you want to know what straight line moves are? King Dollar has it all. King Dollar up another 208 ticks today. You're at 82.58. King Dollar, you know, the A to B equals C to D is 83.50. I suspect what we're going to see, though, is that you're going to see King Dollar make the run up to the swing point, and that swing point that we're talking about is 84.50. 84.24 to 84.50. You know, you don't get that close to swing points, folks, without testing them. So right now, that's what I expect you want to do. That's on the shorter term. On the larger term, it looks like it's a very large ABC structure up to the 89 level. Now, and in that context, that's where the challenge is going to be for the metal markets. I suspect that challenge is going to come like this week. That's the way this is set up right now. Some of the high-volume stocks in this low-volume market we have. Bank of America up 17 cents. Apple is up 35. We get Burger King up 5.49. Burger King is looking at Tim Hortons to basically take that over, do business, well, do the accounting out of Canada. You got GE is up 6. We have Gilead Sciences is up to $3. Inside some of the Dow stocks, what we have, you have Caterpillar up 49, American Express is up 67, you get Oxy up 94, Honeywell is up 23, Big Blue is up 75. This is Tom O'Brien, this is TFNN. Our phone number is 877-927-6648. Stay there, folks, coming right back. Dow right now is up 77, Nasdaq's up 18, S&Ps are up 7.5. Gonna be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment, with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
927-6648. Right now, you got Big Blue is up 80 cents, trading at 191.21. Big Mac is flat at 94.46. We go over and take a look at Amazon. Amazon is trading out here at 334, up 263. Well, it's going to get interesting with Amazon. Amazon, they're buying another company, I believe. Yeah, they're going to buy Twitch for $1 billion. Amazon's buying a video service called Twitch Interactive for more than $1 billion. Its biggest acquisition ever. Adding to an online gathering place for video games, people with knowledge, the plans. Amazon moved to buy Twitch after a startup's deal with Google fell through, folks said. The way Amazon is set up right now, folks, is going to get really intriguing. Amazon had a monster gap away when they come out with their numbers the last time on 724. Got gaps from 364, gets down to 304, does a counter trend bounce up to 335, and today you're testing that little 335 to 333 area with 1.7 million versus 2.4. So we're still set up on Amazon to run down about that 288 area. You go to Big Blue, we take a look at IBM. IBM can't get out of its way also. Inside the Dow Industrials today, this is what's putting strength inside the Dow Industrials. You have Goldman Sachs is up 287. JP Morgan Chase is up by 93. Nike is up 79, and Merck is up 58. Taking strength away from it is Intel is down 17 cents. You have Disney off 7. Walmart is down 5, and you got Marvell off 2. So you can see inside the Dow in general, most of those stocks are green. The Dow Industrials themselves, the high that was generated in the Dow is 17,151. That high came in on the 17th of July. Today we got to 17,124, and we'll see if in fact it can close over the 17,074. The 17,074 will be the high of last Thursday. Bottom line, it should, if it wants to take out these highs, it definitely should be able to get over that level. We'll see if, in fact, it can do it. Inside the Index 100, the NASDAQ 100, when you're talking the strength, a couple biotechs, you got Illumina up 551. Now, Illumina has been a dead cat bounce, so I'll come back to that, but that's a stock that got killed. Gilead, however, has not got killed. That's up 327. I believe that's at highs. You have Tesla up 553 at 262, and you get TripAdvisor up 213 at 104.12. That's putting juice into the Index 100. Taken away, you get Xilinx down 55. You get Texas Instruments is off 60. You get Analog Devices is down 58. And let's say Avco Technologies is down 17 right now. Let's go over and we take a look at Google. Google right now is trading out at 590, and she looks like she's turned the clock a little. We'll see. Google just did a counter trend bounce up to ICE, which is the 591 area. We had come down with 2.3 million, testing it with 1 million. And what I do expect, what you are going to see here, folks, is this. Coming into this week is going to be slow. So you figure there's plenty of people on vacation this week. Friday will be dramatically slow this week. Monday's the holiday. Tuesday, folks will start coming back to work. You're going to see Wednesday, Thursday, Friday of next week. Summer's over. The fall, Wednesday, Thursday, Friday of next week, you're going to absolutely see more volume in. We'll see which way it goes. The week after that, then you get action. Man, when I say action, I'm going to say there's no excuse for light volume, heavy low volume, all of the above. Because then what you have is that you have the summer over, you get the fall into space, and then the next time there's the break at all, and this is definitely a long stretch, would bring you from the first week of September going all the way out to basically Thanksgiving. That's kind of how that shakes out right now. Let's go over and take a look at the silver market, SLV. We'll use the SLV looking at this. The SLV right now is trading at $18.60. That level there is holding. There's no doubt it's holding. What we want to see, however, is that you want to see it get back inside the 1936 area. Because what the risk is now is that is silver going to go after its lows? That low in the last 6 months is 1791. 1825 is the high of the low. 1791 is the low. When we look overseas, what we had overseas last night is that you had the Hang Seng was up 0.2%. Shanghai was down 0.5%. Nikkei was up 0.4. In Europe today, you had some pretty good strength and correlation. Now this is a little divergence here, and this is what it is. The FTSE was flat in Europe, which was actually, hold it, 20. The FTSE must be closed. The FTSE was closed today. Today's the 25th. Yeah, the FTSE was closed. The DAX was up 2%, though. 1.8%. And the DAX and the CAC Crow in France was up 2%. If we go over to the DAX and we take a look at the DAX, right now the DAX is at 95.10. ICE on the DAX is 95.82. So it does have another 75 points that it could go up there. Thanks, Mark. It's a bank holiday in the UK. So the DAX has that 95.82 level that it can get up to. That would be just going up to ICE and, see whether it has any more strength. Because the DAX had come down from 10,050 to that 8,900 area with volume. The last two swing points, the lowest swing points on the DAX actually had broke. The March swing point had broken the February swing point. The August swing point had broken the March swing point. Now that's not the only indice in the world that's done it, but what that has done, our benchmarks, meaning our February 5th benchmarks, they haven't got broken except in the small cap arena. We go over to the IWM, we take a look at the IWM, small caps, use that as the correlation. IWM's trading at 115.83, up 62 cents. You're going into 50 million with 21 million. If we look at the actual Russell, we take a look at the Russell 2000, which is the correlation for that IWM, and we put this, the last low, so your May low, let's see, the May low in the Russell was 1082, 7, this is amazing. Yeah, so the May low took out the February low by 2/100ths of one. That's about as close as you can get. The Russell 2000 right now is at 1165. That 1169 basically would be ice. We hit 1170.69 today. As we have come up on a weekly basis, what you're going to see is that the Russell itself come off the first high with 1.7 million, come off the second high with 1.2 million, and we've been going up with 1.11. Yeah, so that's kind of close. The volume in the Russell still is heavier at the bottom side of the channel than the top, and this is where it's crucial that you better make sure that you are doing percentages, because the couple 100,000 isn't bad, but it is bad in the context of when you're only dealing with 1.1 or 1.2 million. That makes quite a difference. There's no doubt about that. We take a look at the XAU, the HUI. Inside that metal market, XAU right now is at 98.12. Swing point that it's going after, and I'd like to see it hold, is 97.05. And the HUI, what we have, the Gold Bugs Index, the Gold Bugs Index is at 234.80, and you're dealing with a 231.34. What has happened is this, is that as the XAU and the HUI has backed off, the volume has been lighter, no doubt. Now you want to see price hold. The reason you want to see price hold, because if you back under those swing points, even on a regular retracement, you can go, well, you'll go right back to the sign of strength, which in the XAU and the HUI go back to June 18th, which is a lot lower. With 234, we're talking 220, so you're talking 14 points, so that's 5%. So the aspect of the metal market right now and what the dollar is doing, this is going to be a large test, folks, coming in this week. So we'll see where that whole baby does shake out. But as I said a little bit earlier, the contract itself is holding. The dollar, though, wants top. This dollar just does not want to stop. And as the dollar goes up, of course, that puts even more strength into the bonds. Because now if we go over to the euro, if you want to see something that's amazing, so the euro is at 131.94. The euro right now is making the run to go after its swing low of 118. It's like, really? 127 is the next stop. It looks to me, though, it's going to run all the way back down to 118. We get a euro at 118. You take a look at the bond market. The 10-year right now in France is running at 1.3. We're at 2.3. It's like, do you really want to borrow? You want to lend money at 1.3 and then lose money on the currency transaction too? I don't think so. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow right now is up 83. Nasdaq's up 21. S&P's up 8.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow right now up 80. Nasdaq's up 18. You get S&P's up 8. If we go over and we take a look at these E-minis for a minute as we come into this closeout here, ESU4. So, there we go. So the futures out here today, folks, got to 1999.75. Right now we're at 195. When we take a look at this and you just put this on a, whoops, there we go. On a daily basis, what you're going to see is that the highs of last week were 1992. We hit on the futures now, the 1999.75 level. And when we're watching this week, you have two different levels, meaning you close over these levels, you want to go higher. It's 1992 on the future. You close under that the end of this week, it's like, okay, you're going to go back inside. The larger benchmark, however, does go back to July 24th. That's the number we took out, which was the 1985. If we take a look at the cash S&P, which is more important, by the way, okay, because what ends up happening is that the only way that the cash can move is when the market is actually opened. And we're at 1998.35, and the benchmark on that is 1991.39. Where I'm going to bring you back there is the same 24th of July. If you do get back under 1994.76, that would be saying, okay, you get under the low of last week, and it's a failure. When we went up last week, we had dramatically lighter volume than the last high that were up there. So we're up here teetering on air. There's no doubt about it. The real question is how much more can it get pushed? If it will get pushed, we'll find out. We go take a look at the bonds. Still want to go higher. NASDAQ 100. So let's look at the 3 Qs for a minute. We bring the 3 Qs up, and we're going to put this out on a 20-year basis because the 3 Qs, no doubt, have crawled all the way back up. The high of the 3 Qs is 120.00. That high was generated in 2000, March of 2000. The swing point that we're dealing with right now is pretty dramatic, actually, because, see, once you get over a swing point of 89, it's like, are you really going to make a run to 103? Well, that's the swing point you're dealing with. 103 is the swing from September of 2000, and that's where the market just went straight down from 103 to 20, believe it or not. That's pretty sick, 103 to 20, but that's what it did. That was without a bounce. The first initial bounce in the NASDAQ, we went from 120 in March, you got down to 71 in June, no, in May, rather, and then you bounced from 71 all the way back up to 103, and that was ice, by the way, and then just gave it up. Gave it up in spades, too. When we do look at this, and we take this, and I put this out on a quarterly basis so you can see a little bit cleaner what we're coming into. What we do have on a quarterly basis, even though it was that long ago, we're coming into 2.9 billion shares, but last month we did 2.4. Actually, quarter by quarter. So last quarter, that quarter would have been the quarter that ended in June. We did 2.4 versus 2.9, which, is not that bad, actually. I mean, we've seen a lot worse. There's no two ways about that. Inside the SPY, the SPY, different ball game. When I say different ball game, what I mean how dramatically lighter volume this context is and has been. When we take a look at this and we put this on a quarterly basis just so you can get a little bit more clarity on it. When we took out the highs, right now you're at 200. So when we took out 157, we did that with 9.2 billion versus 12.1. And from that point on, that point that when we took it out, that was June of last year. Each and every quarter, so this is how the quarters shake out. 9.2 billion, 6.8, 7, 7.4, and then 5.8. You know, you can see we just went from 7.4 to 5.8 on the last one down. And is it a unique situation? Yeah, it is. Is the market going to continue to go higher on lighter volume? Oh, we know that it's done that for a long time. Bottom line, you better make sure that you have stops in, because we will get a correction, folks. And you know, I hear many people on the air on a continual basis thinking that the correction's never going to come in anymore. And listen, you know, anything can happen in the marketplace, but if I've learned anything over the last 20, 30 years, what happens with the elevator down, it's fast, it's furious, they don't get out of the way. And what you do have in this particular case here is this, is that there is year after year after year, what has happened, no doubt, is that anyone that was buying the dip has made money. That, in fact, makes it worse. Why? Because when it doesn't come back, unfortunately, that's when the largest amount of money ends up getting lost. When you do look at the aspect of the last, if I just put this on a yearly basis, what you're going to see is that if we pull this back to August of, let's see, if I go to August of last year, you're dealing with 40 points. So you're dealing with a good number compared to where we were. 170, and now we're at 200. That's the way this baby is shaken out at this particular point. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. That live programming starts at 8 o'clock in the morning. John Logan kicks us off to 6 o'clock in the afternoon. You can get all that programming right on your cell phone, TFNN.mobi. If you'd like to get the Tiger TV, just go to TFNN.com on your cell phone. On the right-hand side, you're going to see a TV. Hit that TV. You're going to get the audio. You're going to get the video. You're going to get all the charts. You're going to get the whole ball of wax. As we come into this closeout here, we take a look at the SPY. What you have is this. The high for the day in the SPY was 200.14. Looks like it's going to close pretty close to that high. No, the high is 259. Right now we're at 214. We go to take a look at the 3 Qs, the NDX 100. NDX 100, the high of the day was 99.68. We're at 99.39 right now. And the small cap arena, we take a look at that IWM. The IWM is at 115.73, and you get 116.41. And on the 116.41, 115.73, yeah, the small cap is the closest to basically failing once again, and it just can't seem to get back to that high. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We have the Dow up 81, NASDAQ up 18, S&P's up 8.5, gold down 330, silver 1941, bonds 10-year 125.30, 30 140.22. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. We're kicking into the last week of summer. It's actually not the last week of summer, but as many of us celebrate it is. Labor Day weekend's kicking in next Friday, Saturday, Sunday, and Monday. Let's take a look at this card is by Richard Bach. To bring anything into your life, imagine that it's already there. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials close up 75, NASDAQ up 18.5, S&P's up $7.75 at 1,995.50. Gold contract down 330 at 1,276 an ounce. You had silver off 4 at 19.41. Platinum down $4 at 1,416. Light sweet crude off 25 cents at $93.40 a barrel. Bonds, they refuse to back down. The 10-year right now is at up 3 ticks at 125.31. 30-year is up 11 ticks at 140.28. And the 10-year wants to run to this 28 level. The 30-year looks like it's going to run to 142. The yield on the 10-year right now, folks, is 2.384. That is going to be making its way back under the 2.3 again. That puts the 30-year at about 4% right now. King dollar, What are you, King Dollar? I was up 203 ticks at 82.58. King Dollar wants to make a run for this 83.50. I do expect what you're going to see on King Dollar is about the 84.50. 84.50 was the swing highs from the last, let's see, let me get you the exact. There's two separate swing highs up here that it's going for right now. And those, they're smaller swing highs, but those, the first one, we go backwards, was on July of last year, July 13th. Well, July of last year, 2013, we're at 84.96. That was testing July of 2012, which was 84.24. So King Dollar is on the move. It's a straight line move. It has conviction behind the move. That's the first part. Second part may be much larger because as you get into that B point, that very well could be an ABC structure on the way up and it'll blow that baby away. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We reached 2001.95. You close out at 1998.21. Your benchmark out here in the cash S&P, folks, is 1991.35. Today we did 484 million. Let's see if they've whacked it up to 500 yet. No, 493. They're having a tough time getting up to 500. I believe that's going to be, yeah, it is. It's right now, thus far, that's the lightest volume out here for the year. What we did have last week was the lightest volume. Now this is surpassing that. We take a look at the SPY, the SPY. What you have with the SPY, she closed at 200.20. 63 million shares were traded. You know, that's after coming downtown with 183 million. That's after taking a swing high out of 199.06. Now, the 199.06 is the benchmark on the SPY. That would mean it has to get back under that in order to get into lower price. NASDAQ composite, we have with the composite. Composite goes forward once again out here today. The composite goes up $18. You did 1.370 billion. So the NASDAQ also is contracting at 1.376 in a huge way. Friday made a high with 1.3. Today with another 1.3. NASDAQ, I suspect, should be doing about 1.9, 2.2. NDX 100 using the three Qs. Three Qs are at 99.40. We did 22 million shares. That had taken a swing point out of that 24 million shares, as well as 35 million. So there's no doubt you're up to higher highs, have lighter volume on air. Bonds, both the 10-year and the 30-year want higher price. That's how this is shaking out. They refuse to back off. Let's go over to that oil market for a bit, because what you have with oil is this. Oil is building cause for lower price. The oil contract today, you're at 93.43, and anything under, which it did it again today, anything under 93.86 can send this oil contract. This is pretty intense, actually, because it sends it down to 83. And the volume is certainly there. When we came down last week, on the 19th of August, you got down to a 92.62, nice expansion of volume. Looks like it's a very large ABC structure on the way down, which is going to make things really nice coming into the winter. If we take a look at some of the, let's see. So gasoline right now, wholesale is $2.75. Natural gas was up by 2.5% today. So natural gas had a nice little push higher. Let's go look at natural gas for a second. So natural gas was up 9 pennies. Yeah, natural gas looks like it's on the move again. So natural gas right now, come down from 470. You're at 390. It's going to go attack the 3938. There's 4 digits on there. 3 digits. It's going to go after 3986. You get juice at 3986, then you can really get some action going in that natural gas market. The gold was down 0.2%. You had silver off 0.3%. What we're looking for inside that market is this. We're looking that the gold contract itself I want to see this baby hold the June 19th day of strength, and it's just sitting right there. That June 19th day of strength, folks, is 1277 flat out. Right now, we're 1276.60. It is important that it does hold it, because if it doesn't hold it, you'll see the gold can get down to that 1258 to 1242 level. The equities themselves, XAU, HUI, they pull back, have lighter volume. They have a swing point, however, underneath it, and I suspect it wants to go after that swing point. If we go over to the IBB, the biotech index, that's trading at 272 right now, and we put this on a couple-year basis. What you're going to see is that the high in the biotech is 275.40. It's going to go after that high. No juice on the way back up, but it wants to basically, go up there, at least test that high and see if it can take it out. The last swing point that it's going after right now is the 266. We moved into that last week. So you get 8.4 million with 4.6. That's pretty intense. But guess what? It wants to test it. Inside the biotechs, Gilead went to an all-time high today, and this has some juice behind it. We did 19 million shares out here today, and, this has been a straight line move, no doubt, all the way up. It definitely has some juice. The largest mover, however, inside the NASDAQ 100 was ILMN. This was up $5. This baby here, when we bring this back, what you're going to see is she hasn't been able to handle this 183 area. We'll see if she can do it this time. This has been trading up here now for 8 months. Well, 1, 2, 3. Yeah, 7 months. This is the 7th month we're up at these highs. And each time that it gets up there, the thing that's amazing about the stock is that when it gets up there, man, it has a personality beyond belief. Okay, the first time it was up there, it got to 181 and then went down to 148. That was the month of February. It tries it again and gets to 183 in March, and then trades down to 133 and closes out at 148. Next month, it goes from 162 to 127. So that correlation went from 183 to 127. Then we went from 133 back to 161. Last month, we got back up to 185. This is, if you're trading this stock, folks, you need man, you better be trading in the option market. That's the bottom line, because that volatility is absolutely amazing. So you have a $170 stock price that trades back and forth $55 to $60. 877-927-6648. We had the Dow Industrials finish up 75. NASDAQ up 18. S&P's up 7.5. You stay right there, folks. Come back with our Tigress. Amy Smith from IBD. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 75. NASDAQ was up 18.5. You had S&Ps up 7.5. And as we do each and every Monday at 20 past the second hour, we have our Tigress, Amy Smith from IBD. And, folks, if you haven't either test drove the print edition at Investor Business Daily or the digital edition at investors.com, you can come over to our website right now at TFNN. You're going to see the banner, investors.com banner on the right-hand side. You can hit that banner, can take your choice, whether the print edition for 2 weeks, Investor Business Daily, or the digital edition at investors.com. If you are on a computer, folks, go with the digital edition. There's a lot of great tools out there that you can growl and prowl with each and every day and get a great education. Amy Smith, what's going on?
Hey, Mr. Tom, I'm doing great. How's everything with you?
It's great, and I heard you just got back from San Francisco.
I was in busy. Oh, my gosh. Wow. That area downtown, Tom, ooh, it was like New York City.
Yeah.
The sidewalks were busy. You got a lot of tourists in the summertime. It was busy. The investors were great. I was at the Money Show. I had 2 different speaking engagements. But, yeah, it was fun. It was awesome.
Let me ask you, was there a lot of people at the Money Show? What was it like?
I was trying to gauge that. There were a lot of people in the sessions where I spoke. So,
okay.
But I can't, I don't know.
Yeah, I see. Okay, right.
I don't know. The whole Money Show, honestly, Tom, looked a little smaller to me. But
yeah,
the last time, but I have to tell you, the last time I worked one was like 5.5 years ago.
Yeah, no, the last couple I went to, we don't go to them anymore because of the fact that they're that small. Do you know what I mean? That's why I was asking. Because what has happened is that everything's digital. I mean, just people time. It's time to get on the plane to go do those things. Do you know what I mean?
Well, here's another thing. I didn't even realize once I was giving my speeches, we had them as a webinar,
yes.
And a ton of people just tuned into the webinar.
Yes. Right.
That was kind of interesting, too. But it was still lots of fun. I had a very good time with, in each of my sessions, I don't know, a couple hundred people.
Yeah, no, that's it. It's huge. And it's great to see people and be there. There's no doubt about that.
It is. It is really fun to meet them in person. It really is.
No doubt. So, what is the current IBD take on the market here?
All right. Well, you know what? Look at the NASDAQ. We're marching higher. We got the S&P flirting with 2,000. You know, last week the market kind of yawned about Janet Yellen, so they pretty much baked into whatever she said into the market. We had a good day today. That was nice to see. You know, it was funny. The guys on TV, we have an O'Neill security trader, Kenny Polcari, and he was on CNBC today, right? Yeah. And they said, we're like the only 4 guys working today. So I think we have to wait till everybody gets back from the Hamptons. Everybody is on vacation still, apparently.
Sure.
There's not a lot of action on the floor. So let's see what happens to this market when, you know, like September or maybe next week.
No, I'm with you. I mean, there's no doubt that it keeps edging higher, but there's also no doubt, I believe, that I'm looking at this, is that last week was the lightest volume we had in the NYSE, but now today's coming even lighter. It's like, okay.
I know, isn't that crazy? So, you know, but yet everything's holding up pretty well. We got a couple stocks that are pulling back and correcting, but I tell you, for the most part, we've seen some more breakouts. We've seen, Foot Locker took off on Friday on earnings. So we're still seeing some pretty good action, even though it's a little sleepy.
Yeah, the shoe companies are getting some traction, aren't they?
Well, they are. You know, the reason I brought up Foot Locker, we've sort of already done this and talked about it.
Yeah.
But the reason I did bring it up is sometimes folks need to be patient and they have to be a little diligent. Because how long have I been mentioning this on the show? Several times.
Sure.
Well, they reported earnings, and now the stock zoomed higher. And you know what? They did take a jump. They had 39% higher profit, which is the biggest in the last 7 quarters. And we've been talking about this. Those crazy basketball shoes that all the boys are wearing, the neon colored basketball shoes are really popular, and they're branching out into, the children's shoes, so they saw a bounce in that. So, this is sometimes you have to keep these stocks on your watch list and just go back and check on them.
Yeah, particularly shoes, because they're so inexpensive to make and they get so much money on a fundamental basis for them.
Sure,
yeah,
that's right.
Huge. So, in the IBD New America section, talk to me about that. Auto Home, right?
Auto Home, and the ticker symbol is ATHM. It's fine if people don't want to play these. I understand it because these Chinese companies sometimes frighten people, but I just thought I would bring it up because Bit Auto, you and I looked at that one, and they're in the same space. They do essentially the same thing. They have auto content that people can go look at. They can look at reviews on the cars that people have bought. They can see the pricing of new cars. They can see the pricing of used cars. And this company is a newer IPO than Bit Auto, although Bit Auto is also a new IPO. What's interesting here is the story, Tom, and that's where I think we have to just keep our eyes, on China. Right. 22 million new vehicles were sold in China last year.
Wow.
Versus 15 million here.
And 15 million here, just so if you don't understand, folks, is the top of the market. In 2007, I believe it was 17 we did. So we're already at the top of the market again, which is pretty cool. What's interesting, Amy, is that one of the tigers last week, after he had got off, because we were talking about Bit, right?
Right.
And this is so common sense, though. But check this out. He said, but it's really weird. And the stock, the charts themselves look great. I'm not saying that, but it was really interesting, like in a common sense way. He says, well, why would someone buy a car and then go on and give it a bad review? Do you know what I mean?
Right.
And it's probably just a smart business plan, folks, because think about it. You're not going to go out and buy a car and then go back on the site and give it a bad review. So most people are going to buy it and say, oh, this is a great car. I like this. I like that. Because my understanding is that that's an after review, right?
It is an after review, it's a very curious thing. I guess it's like eating at a restaurant. People make comments on Yelp. I ate here. The food is horrible.
No.
So it's very interesting. I don't know as much about, because I don't know anyone who's bought a car in China. So it's a space that I'm not as familiar with, but certainly the news on this is something that, in other words, the growth that we went through, when people were, we got airplane travel, we got cars.
Sure,
China is brand new to some of this stuff, which is hard for us to wrap our heads around, that many new people are buying cars.
Yeah, I can see it, though. I mean, when you have people going up in lifestyle, meaning, going from poor to middle class, is a huge deal. There's no doubt about it.
It's a huge deal, and that's why some of these Chinese IPOs, VIP Shop Holdings, you know, that's another one. They sell the brand names, and the Chinese people like to buy the brand names, the Chanels, you know, all of that stuff is for sale on that site. And of course, all these people they're online more and more and more, shopping and going online. And we saw Baidu, which is the Google of China, made a huge move. So, you know, I understand people saying that they're not comfortable investing in China, and that's fine. If they don't like the Chinese companies, they can stay with the U.S. ones. There's plenty of those. But I do have to say that the interesting stories, a lot of them are coming out of China.
Yeah, you know, I heard a analyst last week, and he made a great point. And what it was is that, listen, you know, if you don't like these stocks, that's fine, okay? On a short-term basis, yeah, they're going to go up, down, all over the place, be highly volatile. But if you think of the larger picture, if you don't think that there's the growing middle class in China and that, you know, 5 to 10 years from now, that middle class hasn't doubled, well, I think you're wrong. And I think he's right, you know? I mean,
right.
I think it's that cut and dried, too. And we're talking about billions, too, not just meaning billions of people, not 50 people, 100.
Exactly,
you know.
Not just a small amount of people. And obviously Tesla moving aggressively into China, you know, there's a reason why they're doing that. They see great opportunity there.
Yeah, no doubt, no doubt. Listen, folks, come over to our website at TFNN. You're going to see an investors.com banner right on the right-hand side. Hit that banner. Can take your choice. 2 weeks of the print edition, Investor Business Daily, or 2 weeks of the digital edition, investors.com. Amy, you have a great week, safe week. Look forward to speaking here. Right back here.
Okay. You too. Take care.
Bye-bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 75. NASDAQ goes up 18. S&Ps were up 7.5. And as we do each and every Monday at 30 past the second hour, we have our man, Mr. A.J. Kaling. A.J. does one of the best option shows on the planet, folks, every Tuesday, right here, noontime to 1 Eastern Standard Time. Option Hour, sponsored by Thinkorswim TD Ameritrade. Now, if you haven't test drove the Thinkorswim platform, folks, come over to our website at TFNN. You can see the banner on the top, on the side. You can click the banner, bring up the account. They'll put paper money inside your account. I use it each and every trading day, whether you're trading options, equities, futures, or commodities. It's all on one platform. It's an outstanding platform. AJ, what's going on?
Hey, Tom, good to talk to you. How you been, man?
I'm doing good. You have a good summer for yourself?
Yeah, man, so far so good. Can you believe what's going on in these markets?
I
Cruise
can't.
almost at 2,000 today.
For me, AJ, this is like Groundhog Day, man. I'm not kidding.
It just happen? It seems like, yeah, every day for the past 2 weeks, right? Up and up and up.
There's no doubt. And, you know, we know that we're at a slower time in the marketplace, meaning, you know, this week in particular, last week.
Right, not much volume.
But bottom line, you know, S&Ps are at highs, right? I mean, that's
it's crazy. You had a great setup right there, telling everyone to go ahead and get signed up for the paper money account and everything, get started on the Thinkorswim platform, because I actually want to talk about tomorrow unlocking your potential tips and tricks to get the most out of the options data you see on the Thinkorswim platform, stuff that might be kind of hidden for the newbie, but I think it's going to be a real good one. So hopefully everyone tunes in tomorrow noon to 1.
And you know, when AJ is talking, folks, something that you really want to wrap your head around is that this platform is a retail platform, but it's actually a professional platform. And so, you know, as AJ goes through this, you're going to be surprised at how easy the platform is when he walks you through different strategies. So, you know, the platform certainly is not going to say, hey, I'm bullish and bearish. We know nothing's going to do that. But what it does do is that when you get a view on the marketplace, then you can walk through the platform and say, okay, I feel this. What are the strategies I should be looking at? And, in fact, you know, is the volatility there or not there for that type of strategy at this particular time? So
exactly. You know, that's funny. I was actually out in San Francisco at the Money Show Thursday, Friday, and Saturday this past week.
Yes.
And so many people kept coming up to me saying, wow, this thing is incredible. Like, how much does it cost? How much does it cost? We're going, no, there's no cost. It's free.
I know.
If you're a Ameritrade customer, you get this platform for free. It's your trading platform. There's just so much to it. A lot of the other things they brought up, they said, there's kind of a lot on here. I said, yeah, you're right, there is. So let me walk you through it, tell you what to focus on, what to not focus on. Once you learn what you care about, we can get that for you, and we can ignore everything else. So, yeah, there's a lot of stuff on the platform that will really help you out with, once you have your strategy in play, we could show you, some of the tips and tricks that will help you, refine your searches and your scans and your option strategies.
Which saves you a huge amount of time and money, no doubt.
Exactly.
Listen, it's right here tomorrow, folks. And don't forget, all the programming at TFNN, folks, start at 8 a.m. Eastern Standard Time, live programming. 8 a.m. to 6 p.m. You can get it right on your cell phone, TFNN.mobi. If you want to get the Tiger TV, that you'll be able to see the platform simultaneously, the video and the audio, just go to TFNN.com. On the right-hand side, just see the TV, hit it. AJ, you have a great night, safe night. Of course, we look forward to the show tomorrow.
Thanks, Tom.
Okay, man. Have a great one.
All right.
If you do trade the futures, folks, what you had last night was not unique. It has happened, but this is always really dangerous. And what you had is that you had the CME go down. What happens is that normally on a Sunday night, Eastern Standard Time, your futures start trading about 6:15, 6:30. Bottom line, last night, the CME was down until 9 o'clock, and what you had there is that nothing was trading. Okay, so what does that mean? Well, I'm going to basically change gears on you just for a second and go from the marketplace just to electronics in general. Electronics in general, folks, what you want to make sure of is this, is that there's way too many folks on a continual basis don't hold cash in their hands or at home, okay? Have some cash, folks, okay? You don't need a lot of cash. Just have something, okay? Because the bottom line is that we're in an electronic age. ATMs can go down, and I don't care whether it's 3 hours, 5 hours, 15 hours, or 2 or 3 days. If you don't want to be ever caught in that situation, my son and I have been in a couple big hurricanes. We weren't caught in that situation because we had cash. But the bottom line, we've seen a lot of people get caught in that situation. It's a bad situation, period, no matter whether you get caught in it or not. It's the easiest situation if you have cash. Your history without it, okay? When I saw that go down last night, I said, oh, this is interesting. For 2 different reasons. Now I'm going to change back to the marketplace. So you're down for 4 hours. And this was the kicker. And this is what is kind of disgusting in the context of news media in general, and we'll see whether it wasn't in the New York Times today, or it wasn't in the Wall Street Journal. And what I specifically mean is this: when this actually went down, and this probably has to do with there's not a lot of writers that are traders also. When it first went down until like at 7:30 at night, I think I kept bringing it up. I'm saying to myself, this is sick. What you saw across the CME was this: is that it was a one-liner that we have technical issues. That was it. That's all that was on there. Then what ended up happening is that they changed that at approximately 7:30, and they said, we are working on these technical issues, and you can call S&P Command Center. Well, that said 2 different things to me. The first thing it said to me is that they had the arrogance for being down for 2.5 hours with a one-liner, and they wouldn't answer the phones. No numbers, no nothing. That's insane, folks. That's insane. Because if you were a large money manager and you were trying to cover whether it's long or short, before Asia was opening up, you're done. You're done, okay? It ended up being a flat market, so it wasn't a big deal. But it could have been totally different. To go back to the aspect of electronics in general, basically the CME kind of just said, well, hey, we got this thing fixed. End of story. That's what kind of is. That excuse doesn't work. Have cash at home, folks. That's the real bottom line. Because what you do not want to get caught in the middle of is our ATMs going down, whether it's for a day. I can tell you from being in Katrina, you're down for a day and a half, 2 days. It's problematic, like in a huge way, not in a small way. And it's very easy to do. And as I said, you don't need thousands of dollars. But on computers right now are much more successful. They're faster. And the amount of non-information that we get off of all these is accelerating much bigger. So that's telling me that it's a much larger problem that we actually don't even know about. You know, when large institutions have a one sentence and your life might depend on it, that's like insanity. 877-927-6648. In fact, this is going to be interesting. Look at this, how crazy this is. If we pull up the CME, it wasn't even down. That's insane. So check. See, there's like somebody disconnects here. It's unbelievable. So the CME today was up 79 cents. Now it's coming into a downdraft that was created out there from January. We put this on a couple-year basis. Yeah, it's still basically topping out. But bottom line, it certainly didn't get penalized for the aspect of going down and not basically saying a word. A technical error at the CME prompted a 4-hour trading halt at the world's largest futures, preventing buying and selling of contracts tied to major indices, treasuries, oil, and gold. The CME group was forced to suspend trading from 5 to 9 yesterday on its Globex electronic market. Only Malaysia was trading. It was one of the longest exchange disruptions. The shutdown was not as disruptive, of course, because it wasn't during market hours. Okay, so CME Globex markets were halted due to a technical issue resulting from planned software reconfiguration made over the weekend as part of an ongoing technology enhancement. It's always great when they enhance it, and bottom line, they bring it down. Following the incident, CME's group shares rose 1.1% to 75 today. Traders were barred for using some of their favorite derivatives to bet on remarks at the Andrew Central Banker in Jackson Hole. No, traders weren't stopped from that because all that information in Jackson Hole had already been out. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back. Dow Industrials finished up 75. Nasdaq up 18.5. S&P's up 7. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. When we look at the sectors out here, we start off with the XLE. Inside the XLE, you had ExxonMobil up 25. Chevron was up 73. Schlumberger 119. We actually go over to the ETF and we take a look at it. What you have is this. You're at 97.87. This is down off the high of 101. We did 4 million shares out here today. She's coming into a test of 98.18. Now that had 17 million. So that's going to be a big number. We'll see whether we can get up to it. And the 98.18 is ICE. The XLF, what the XLF did, it got over its highs with 23.32. The benchmark on that it did get over is at 23.06. BRK, we look at Berkshire Hathaway. Berkshire Hathaway is the largest weighting structure inside there. That is up 48 cents today. That's hanging at its high right now. Bank of America, that did the deal last week with the Justice Department. She came into a gap. Now, what Bank of America did, Bank of America is down from 18. She traded $18 in March, traded down to 14. There's a nice counter trend bounce right into its gap. Now, the thing that's going to be amazing, and this one here you really want to watch, and this is why. Markets talk, walk, and squawk, folks, at their swing points. And the swing point for BAC is $16.50. Now, last Thursday, you go topside with 177 million shares. Now, that looks really good, but the correlation, number one, is what you're coming into, and we were coming into 344 million. So 177 went into 344. So we know that's lighter. Then it didn't make the swing point. The swing point is 1650. Now, the reason I'm bringing this up is that this is going to be really an important one, because I've seen this many times happen, that you're in a downdraft, you go back topside, and it looks like you have some strength on the daily, but you're not at a swing point, and in fact, you're coming into a very large downdraft. You know, that's on the daily. Now watch this on the weekly. On the weekly, it came in with 442 million, which is dynamite, by the way. But guess what? We had gone down with 725 million. So that supply line is still hanging out there. So it's crucial as to what Bank of America does at 1650. Now, it hasn't hit it yet. You know, we hit 1640. You know, I suspect it's going to hit it. But how it hits it, can it handle it, is going to be the big number of, if in fact, can it get back up to its highs. You know, so we'll see how that shakes out, but that's going to be a big one. Citigroup, we take a look at Citigroup. Citigroup also had price movement, but it couldn't get the volume going. Right now at Citigroup, what you have is that she's at the top of the range that she's been at for quite a while. We're 51.63. 53 to 54 is the top of that range. And Citigroup hasn't been able to take that out. Let's see. Yeah, it hasn't been able to take it out for 5 or 6 years. You know, when I heard some of the statistics out here today, it's pretty amazing, meaning that the statistic, if we go back to Citigroup, and if you want to see the beating that Citigroup's taken, meaning being the powerhouse versus what you have out here today, is that if we bring this back to a 25-year, because they were all day long, because the S&P had hit 2,000, they're talking about when it hit 1,000, meaning it hit 1,000 14 years ago. Citigroup has gone from a price point of $570 down to 51. So that's pretty insane. That's absolutely insane. Bank of America, AIG, I guess. AIG, when you look at the last 15 years, actually 20, I guess, has been the worst performer in the S&P. If we take a look at this, this is a big number. So we bring this back, and AIG would have went from, 2000, it was $1,738. And today it's $55.89. Now, it's strong. It's going to build its way back up. Not to that, but it's going to build its way back up. But bottom line is that you can see why stops are important, that's for sure, even with great companies. $1,738 went down to $6. Now we're at $55.89. Another statistic out there, which was pretty wild, which I heard on the air today, was this, is that the S&P, so you get 500 stocks in the S&P. Well, they didn't say 100 of them. I believe they said, I got to find out what 10 they were. I believe they didn't say 100. That would have been 20% of the S&P. I believe they say 10 stocks inside the S&P right now are trading at 100 times trailing earnings. Now, that, folks, is bubblicious in a huge way. You wouldn't want to buy something like that. Just to give you an idea what that would mean, let's say that you made $1 last year, right? That someone would pay you $100 for that dollar. That takes a long time to make up. Whatever the firms they were, they better be having a growth trajectory that is absolutely amazing, because to make up that kind of number, that takes a long time. There's no doubt about it. We go over and take a look at Yahoo. Let's go take a look at Yahoo from that. No doubt, right now we're at $37, and we bring that back. Whoops. So Yahoo, pretty amazing. Yeah, $125. That went down to $4. So that took a slight beating too. There's no doubt about that. After the closeout here, let's see what we have moving. If we take a look at ADEP, this is Adapt Technology. That closed at $11.13. That's trading at $9.05. What the heck's happening with this stock? So this stock is they manufacture robots. The products they use for electronic telecommunication pharmaceuticals. That's down $2, but that's 15% in So the earnings, the estimate, the top line estimate was $16.2 million. They took in $14.3. Bottom line, they expected to make to lose 2 cents. They lost 3 cents. So the stock, no doubt, is down. Oh, this has been a nasty stock period. Holy cow! How does this stock do this? You check this out. This is even crazier. This stock in 2000 was $290, and it went down to $2.95. Bottom line is that you're going to see this get hit tomorrow morning once again. It looks like it's a much larger ABC structure on the way down. The last, actually this year, this is pretty amazing. We had 21 bucks, and this thing is on its way down to 750. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Don't forget, write on your cell phone. 9 o'clock tomorrow, 8 o'clock tomorrow morning, live content 8 to 6. TFNN.mobi. Have a great one, folks. Go get them.